Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, there are some indications popping through that inflation pressures might be topping out. But first, American jobless claims rose last week to a bit more than expected at 241,000 new claims for the week, to put 1,327,000 people on these programs and no longer at a record low level. And their producer prices rose more than expected, like yesterday's CPI. But these costs are rising faster than the consumer set. They are up 11.3% in a year, nearly back to the March 2022 11.6% level. But just like the CPI, costs other than for energy are rising slower now, up 6.4% at an 8-month low. And there are indications that the American petrol price pressure is past its peak. Average prices nationwide are down 8.2% over the past month alone, in a consistent declining trend now. If this continues, it will show up in CPI and PPI data quite soon. In China's cities, their economic slowdown is weighing on households. Middle-class consumers are feeling anxious and making painful cuts to their household budgets. Their savings rate is suddenly rising sharply as spending is curtailed. And on top of their property wreck, the consumer hesitancy is raising Chinese bond market stress, which is now as bad as it's ever been. And if this is not enough, heat waves and floods are as bad this year as they've ever been, although that is not just a Chinese problem. But as the world's largest emitter, they are a primary cause. And Singapore reported no growth in the June quarter from the March quarter, a weaker than expected result. And Singapore tightened its monetary policy yesterday in its fourth such move since October, in an off-cycle move for them that saw inflationary pressure rising on the back of Russia's invasion of Ukraine. Singapore targets its exchange rate to achieve price stability rather than the interest rate. And the Australian employed workforce rose by 88,000 in June, a bit more than half of it full-time jobs, and surprisingly number were part-time jobs. That took their unemployment rate down from 3.9% to 3.5%, a record low for them. And globally, freight rates for shipping containers were marginally softer last week, continuing the easing trend. Bulk cargo rates eased as well. The US Treasury 10-year yield starts today up at 2.96%, and 5 basis point rise from this time yesterday. There is less talk today of a 100 basis point Fed hike in July, now more like 75 basis points. And the price of gold will open today at $1,711 an ounce, which is $29 lower than this time yesterday. And oil prices are $1.50 a barrel lower at just under $93 a barrel in the US, while the international Brent price is down to $96.50 a barrel. And the Kiwi dollar will open today a ½ cent weaker from this time yesterday at 61.1 US cents. Against the Australian dollar, we're firmer at 90.8 Australian cents, and against the euro, we're a little changed at 61.1 euro cents. That means our trade-weighted index starts today at just on 70.6 and also little net change. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.